Good morning. Welcome to Morning Call. I'm Lata Venkatesh. With me, Sonia Shenoy and Anuj Singhal. Well, actually, not too much by way of global cues. It was flat global markets. Perhaps the positive for India is that crude prices took quite a knock reacting to the Chinese data. But the Chinese data did not really inspire so much of fear in other risk assets. Certainly not in equity assets. But today, a bit of a red in the Shanghai screen. Otherwise, it's not all that red on the Asia screen at this point in time. That's dollar yuan for you. Dollar slightly weaker, so again there's no devaluation fear as well. But there's plenty of domestic cues to react to. Result season in full swing. A big deal done with Shrey selling its stake in Biome to American Towers, one of the bigger FDI deals that we have seen in recent times. So plenty of global cues to react to, and most of them look positive, especially after that big surge we saw in the Nifty yesterday, almost touching 8,300, and as we now know, helped by nearly 1,000 crores of foreign money.
Oh yes, and FIs have returned with quite a bit of ferocity, haven't they? I mean, almost 900 crores of buying in the cash market, and this, I understand, is the highest buying that we've seen in the last 4 months. So it's been quite good. In fact, the Nifty, you pointed out, has been gaining now for 3 days, and it's up 10% from the September lows of 75.40 that we hit. Also, apart from that, Brent crude has seen another sharp fall overnight, so that also will be an added positive sentiment for our own markets. And in terms of our own market cues as well, the result season has gotten off to a good start. So we saw it with Reliance Industries, and we've seen good earnings come in from the likes of SKS Microfinance, Motilal Oswal, Hindustan Zinc, etc. And on the macro front, Lata?
Well, S&P, some would call it a disappointment because Indian macros have improved so much. The current account deficit is almost non-existent now at 1% or so. And, a ratings agency is meant to indicate whether a country can pay up its money. And as far as the current account deficit declined so sharply, one would have expected perhaps the S&P would have been a little more generous. But clearly the S&P is focused on the fiscal deficit, and there that 4% number and probably the difficulty of even achieving 3.9% is what is rankling with the rating agency. They will probably want to see very tangible steps towards getting to that 3% fiscal deficit before a rating upgrade comes. But clearly that doesn't matter. And the market factors in the credibility or India's ability to pay back its loans much before any rating agency gives you that recognition. The manner in which FIs have been, flocking to Indian debt. The last time when the limit opened up last week, they were ready to buy Indian debt, just the right to buy Indian debt at a premium of 65 paise. Now that's not a small amount, which means you are factoring in some 15 basis point higher yield on a 5-year paper. If it is quoting at 7.5, I'm ready to buy it at 7.8, merely the right to buy that loan. So, the rating agency may not give you an upgrade, but Indian bonds, sovereign paper, has already got an upgrade. The key point, however, to note is that we have corrected our macros, we need to correct it more. So we have to take that comment as well from the rating agency with both hands. Fiscal deficit of 3.9 is bad, and we have to get to 3%. That message has to be taken with both hands.
All right, well, we'll talk about the macros in greater detail in a bit, but first back to the micros, because it's been good days for our markets. Anuj, morning, we've closed at a 2-month high, and we've been talking about how the uptrend is intact. But what could be the next important level to watch for on the upside?
Morning, Sonia. This market is in control of what I describe as strong bulls. What are strong bulls? Strong bulls, are the ones who have discipline and who have patience. This market is making money intraday, but this market is also making you money if you had taken a positional long and you had your stop loss intact. Say for last 5 or 6 days, I've been saying the stop loss for that trade is 8,100. With 8,100 as stop loss, the market never went there. It's just kept moving up. And that's why, making money intraday, making money for positional trades, that's good point. One more thing has happened over the last 3 days. The market has opened a bit positive, but has ended at high point of the day. And over the last 3 days, on an average, the Nifty has risen 50 points intraday. So if you've been, taken position in the morning, on an average, you have gained about 50 points intraday on the Nifty. And I can tell you, you can talk to professional traders, 50 points is a lot of money on the Nifty. So that's where you made a lot of money. And while the FIs bought yesterday, it honestly does not matter because the cash market volumes have been so low. Yesterday's buying also, actually the gross buy number has fallen. It's the gross sell number which has come down so much. It's more the absence of selling than anything else. That's why this number is looking optically large, about 900 crore. Now, one more thing happened yesterday. If you take a look at the Nifty, 25 Nifty stocks were actually in the red. 25 Nifty stocks were in the green. And still the market was up 0.5%. Why? Because Reliance accounted for 66% of the market gain. But that's telling you one more thing, that this is a market about individual stocks. This is a market in which you got to be in the mid caps and in the small caps. In fact, both the mid cap index and the small cap index are now within 5.6% of lifetime high. We've been talking about correction for the Nifty. The mid-cap index is also corrected but has moved back very swiftly and has now moved to within 6% of lifetime high. Why is the index still not moved up that much? Because the bank Nifty is struggling. Even yesterday, ICICI Bank was in the red, the bank Nifty was in the red, and that is the problem point for the market. The leadership sector is not doing well, and at some point it will do well if the market overall does well. But that's really the big question. When will that happen? The only chink in the armor, and that's only if you want to be nitpicking, is the FI selling in index futures for last 3 days now, and this consistent profit booking and also some fresh short build-up that you have seen. But here again, you've got to keep in mind when the series started, over the first 5 or 6 days, FI has bought 7,000 crores of index futures. They're booking profit. They made money and they're booking profit now. So I think I would still want to ignore that number, at least for now. Unless that trends aggravate. And lastly, what's the next number to watch out for? It's a 200-day moving average. 8380 is that number that we'll be watching out for. So that's another 100 points from here. That really would be the big resistance for the market. And Nifty's base has now moved up from 8100, may have moved up to 8200.
Just two very quick questions, because we have a guest waiting. Is it becoming easy to make money? Are we already reaching that stage? And is the wall of worry not there anymore? We were climbing it all the while, and while you do that, markets rise. But when you stop worrying, markets may not rise.
Yeah, the first answer is very easy. It's never easy to make money in the market.
So the last 3 days, you start low, you buy, and you have made money.
Yes, but extent. The point is that you need to have the conviction to do that. Over the last 2 or 3 days.
Is it becoming?
It sort of has become that, but then again, this market will one day give you a 50 or 60 point jolt, and that would take out the weak bulls. That's why I said, it's about strong bulls right now. So, as I said, it's not easy to make money, but yes, if you have not taken long position till now, maybe now you'll have to wait.
My short point is, have we reached the worry point that the market is not worrying?
Yeah, could be. And this market has a bit of a binary event coming up in November with Bihar election results, and ground reports are indicating that it's not going the NDA way maybe.
All right, well, let's move on and talk about the macro cues that we have lined up. The S&P has